Consolidation approaches as Jerome Powell prepares to speak tomorrow on monetary policy. There are a few factors that can play a role into the movement of GME's price. Jobless claims, PCE, and GDP would also be factors that can shift market sentiment. Seeing how things have panned out as of late only makes me feel, well, bullish. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into GME. Let's kill them, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at GME here, guys. I'm coming to you a little bit under the weather here, but we are doing okay, right? We're going to live long and thrive for real this time around. So if you hear my voice a little bit off, please don't mind it, right? Everything is good. So if you can go ahead and take a look at this right here. We have jobless claims continuing, right? This is definitely something that can help us move the market, either up or down. Guys, the numbers have been looking pretty damn good as of late, so I do expect this to come in pretty good. We also have core PCE, right? And we definitely have the GDP month over month and the quarter over quarter final, right? So let's go ahead and just kind of get over those little things there, and we will see how the market moves. But overall, yeah, I think there may actually be a reason to get the market to continue on the upside. If there is something to pull the market back down, I will say that it's going to be something that Chair Powell could say, but I will say this as well. Now, there is something that we can focus here real quick before we get into GME. It would be on the SPY, right? So actually on everything in general. You know what? We can even just look at it on GME just for the hell of it, right? So let's go on GME here, and let's go ahead and take a look at this candle right over here on the monthly time frame, right? So this is your monthly candle coming in with a close, right? So this is going to be 4 days and 17 hours to close this candle, right? So it already kind of decompressed from its low down to 1932. So decompression means that as you approach the close of this macro time frame candle, it starts to come back and revert to its mean, right? So very good. Now, the next thing that not a lot of people are talking about is, in fact, your quarterly close as well, right? So that's going to be your 3-month closure. As you can see here, this already kind of reverted back to its 50% too. In fact, let's go ahead and just kind of measure it here and find out exactly where that quarter close is, right? In fact, we're not going to be able to do it here. So why don't we just go ahead and do it on a brand new chart where we can observe those things, right? So just go ahead and create a brand new chart here. GME would be the one that we're going to look at, just like this. Make sure to put this on regular candles. Let's put this on logarithm chart, and let's go to the 3-month time frame and measure what that 50% could be from this bar right here, right? It's looking like a spinning top doji, of course, guys. That usually means an indecision or a battle. It's a tie between the battles and between the battle of the bears and the bulls, if you will, right? So if you were going to look at here a 50% retrace on that 3-month bar, which is going to be closing it just like the monthly bar is in 4 days, 17 hours, right? That resistance would take us to right about $23.77, which is confluent to a lot of the targets that we're getting from the statistical backtest, right? If I were to pair the upside here with actual price action and not use exactly the data from this 50% of the bar, then we could see here that we have an immediate support right below on this quarter bar from July 1st, 2022, right? So let's go ahead and adjust that bar down to the low of that July 1st, 2022 using a different tool. We're going to use that box, right? That box that we created this range with. So from the bottom of that July candle to the very top side of this area here, right? You can see that there's absolute confluence between this point here and this point, the opening and closing bases. This is opening and closing of the green and red candle, right? So let's go ahead and just extend that just a little bit so that it can give us that range for us to kind of consider, right? So very interesting here. We're getting a 23.52 upside to about a 24.29. And you guys already kind of are familiar with those targets. Why? Because the statistical targets are leading towards that upper bounds of the $4 target, right? So, and we fired that signal at $22. So at around 21.88. So all good. And the price action still continues towards the upside. Like I said, guys, whenever these major time frame candles, any time frame candle really, right, when you start approaching the close on them, they tend to decompress and come back to their mean, right? So in this case, if we did close somewhere down here around 2270, maybe 2290. There is still a chance where price action continues towards the upside and starts facing some resistance at around that 2429 before coming back down to validate the support of around this target here. It would be around 2234 to the lower bound of these targets here, which could be around 2304. In that case, we would be validating critical supports before continuing on to the upside, right? Because I am still getting some pretty macro signals on this, and it is looking not bad, right? Okay, yeah, let's go ahead and now come back to the analysis here. Now, I want to go ahead and show you the projections from yesterday, right? So the price that you're seeing here, this neon green line, is actually my projections from just yesterday, right? I used this. I gave the direction bias of you guys, and if you remember, you were there on the live with me. I did explain to you how the probabilities to this downside right here would actually be minimal, right? So that's why I left it colored red, because it would be the lesser probability area that we would reach. I, in fact, said that it would be a little easier for us to stay within this realm here before us making a continuation to the upside and see how price action worked, right? You guys, we talked about the bump into this area top right here. I mean, this is the price action for GME, right? The way you can do it is just observe candles like this, right? So those are the candles, right? Those are the candles here for GME, and you can see here that we got that resistance here, and then we got that drop that we were talking about, just like we talked about, right? Right back into this area here. Let's go ahead and take a look at the 12-hour, or actually the candle analysis, and see where we're going, right? Yeah, we're right within this area here, right? So we're thinking that we could bounce from the lower end here and then start consolidating within this area right here, right? So that's currently what's happening with the asset. I will say that we have to kind of wait for what the Fed is going to say, what the data is going to say in the macroeconomic sense, and then we'd be able to move forward. But looking at the signals here, using the immediate short term, right? So 15-minute time frame, we have critical contraction here, and it appears to be as though stochastic momentum is still kind of pivoted towards the upside, right? In fact, whenever you have a little bit of a downside suggestion here on one moving average and the other one suggesting an upside pivot, that typically means some consolidation is at play, right? So now let's go to the 30-minute time frame here. 30-minute time frame is decreasing volatility just a little bit with a present upside. That means that over the last few 30-minute candles, there was a decrease in volatility, meaning that the shorts were starting to cover their positions, right? And these would be local shorts. These would be just retail shorts, right? Hourly time frame here is also decreasing volatility with some downside, and you can see the downside is already kind of shifting here. Very nice little what is it? We have a little dragonfly right here, right? That can actually send price action towards the upside. It is a symptom of reversal in immediate short term. And I will say that the following candle to one of these candles here, like this dragonfly doji, this is a validator candle for a continuation to that upside, right? Guys, the reason why I know this and the reason why I have all these little tricks and tips right here are because I am a stock trading instructor, and pretty soon I will be an institutional one, right? Going for a hedge fund here, going to sign some type of an agreement here pretty soon. Looking okay. So make sure to get in touch with me at ArcMastersCourse if you would like some of that institutional training, right? So I am talking about directly to the beginners right now, and I do have further courses for my advanced traders. After the beginner's crash course and mentorship program for trading is done, which is going to start this Sunday, we're immediately going to jump into the strategies mentorship, which is going to be around 12 weeks. And after that strategies mentorship, we're going to go into executions and then psychology, right? So make sure to get your butts into the Arc University and learn how to trade the institutional way, right? ArcMastersCourse at gmail.com. Go ahead and get in touch with me here immediately, right? Because the enrollment is going to stop here pretty soon, guys. The seats are getting filled, and I want to make sure that you claim it before this Sunday's first lecture, right? Let's go ahead and get that done, team. Good for you. So, yeah, let's go ahead and see what the probabilities are here for a downside and the continuation of price, right? So let's go to the bi-hourly now. The bi-hourly time frame is still suggesting a little bit of consolidation like expected, right? We literally said that we would consolidate within this area here. Now, the 3-hour time frame still in that consolidation phase, a little bit of downside here, all good. Same situation with the 4-hour time frame, same situation with the 6-hour time frame, and also with the 8-hour time frame. Now, as we jump into the 12-hour and maybe into the daily, you can see that there is still an upside probability on this, and that's because the signal is still fired from a volatility versus stochastic momentum backtest, and that you guys are very familiar with, right? We have the targets already set out for this run, and I will show you like this. Actually, you know what? We have it in this chart right here. So this is the data sheet right here, right? These are the iterations that we measured right all over this chart, right? And this was using the daily time frame, right? So here's the daily, And if we zoom out, you can see all of the measured iterations that I took part of here to understand or to determine the probabilities of continuation to the upside on GME's daily volatility versus stochastic momentum setup using the standard distribution bell curve, right? If you guys are familiar with statistics, you guys will know immediately what that is. So the signal fired just around that 2188, and we definitely got the standard deviation of 12 spot 10%, which said that we could deviate 12 spot 10% to the downside before making an upside move. So from the fire of the signal of that 2188, we did a minus 12.02% move to that very low candle. So definite slam dunk on that. And now we are back up and around just above the firing of the signal, right? So the target to be expected here would be that $24.28 using the 11 spot 119% upside thrust from 106 iterations measured, 80 guessed correctly, giving us a 75 spot 47% upside probability, right? So remember, guys, that I still have the calculations of the upper bounds of the first standard deviation, second and third, just in case price action were to completely shoot up above that $24.28, 11.19% average move, right? So that secondary target, upper bound of the second standard deviation would be 2704. The third one would be 2968, and the fourth would be around 3234. The signal is still fired as long as we maintain volatility within the threshold of the 15% critical contraction and the critical expansion phase of 90%. As long as we are not touching at or below any of these, at or above, then we should be A-okay for the continuation of this massive high probability signal. So, yeah, guys, one more thing, please consider joining the ARCa Bulls trading team using the links to the left here, right? These links will expire here pretty soon, and I am offering some specific things for this, right? Remember, there are algorithms and everything that a lot of the tools that I personally use are given to you through the trading team as well. So these links allow you to join with one click and one time payment forever to trade with me, right, guys? And even when I'm an institutional trader, even when I'm trading with a hedge fund, I will still be hosting my live trades there for the team, right? So please, guys, consider joining right here, and also consider hitting the description link below where you can just visit the Discord in there. But most importantly, beyond my trades, I want to see you in class. Let's go ahead and learn this, because we are building here champion traders. We are building traders with absolute power and traders that can absolutely withhold their stability within the markets, right, guys? So definitely sign up immediately, guys. Thank you so much. And I think this is a pretty good place to leave off. So we'll go ahead and talk to you very, very soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well, a very, very good rest of your night and or day, and I will catch you at the bell mañana. Adios, team. Let's go.